things that you must have to get approved. The first has to do with collateral. Do you have some kind of a collateral, such as equipment or inventory or account receivables or purchase orders? The second is, do you have good personal credit? If you have good personal credit or you have a guarantor or a credit partner that does, then that opens up unsecured financing options for you. On the third is revenue or cash flow. Do you have cash flow that's verifiable in your business? If you have cash flow that's verifiable, that opens up a lot of private investor money as well as revenue financing and other options. So let's dive in and take a look. So for example, if you have good personal credit, then you can come in and get unsecured financing for your business. Now this is an amazing program that not a lot of people know about. You can get up to $150,000 in unsecured, no documentation financing. And by that I mean you don't need tax returns, you don't need bank statements, profit and loss statements, you don't need any kind of income verification to get approved. You also don't need any kind of collateral to get approved. So because you don't need any kind of cash flow or any kind of collateral to get approved, with unsecured financing, you can get approved even as a startup as long as you have a 685 credit score or have a guarantor that has 685 credit score. Now, all they're looking for here is for you to have a clean credit profile. You shouldn't have any derogatory items on your credit report to get approved. You also should have probably less than 5 inquiries that have to do with hard banking inquiries or revolving credits you've applied for in the last 6 months. And you should have pretty good utilization as well, about 30 or 40% utilization max to get approved. Now, the benefit of this program, or one of the other benefits besides the 0%, is that you can get these accounts report to the business credit reporting agencies. So with our unsecured business financing program, you're getting about 5 times or more of your highest credit limit account that you have now. So if the highest revolving credit limit account you have now is about 10 grand, then with this program, you can get approved for about 5 times that, about 50,000 or more for your business in accounts that report to the business credit reporting agencies. So all the financing you get here reports to the business credit reporting agencies, not on your consumer credit reports. So the benefit there is that you're building business credit, which helps you get approved for no personal guarantee credit as soon as that business credit's established. So not only can you get up to $150,000 even as a startup in 0% financing, but you also can come in through the unsecured program and build your business credit at the same time, which opens up even more financing for you as well. And all you need to get approved is a 685 credit score for you or a guarantor. Now, if you have scores a little less than that, let's say you're at 650, for example, well, then we still have an unsecured business financing program, which might work for you. It has all the benefits of this program. The only difference is that you're getting consumer credit cards instead of business credit cards. And our sources will even help you liquidate those cards to take the physical cash out of the cards you secure. So there's a lot of benefits with the unsecured business financing. One of the best programs I've seen to get the most amount of money, even as a startup with no documentation financing. Now let's take a look at revenue lending. Now, revenue financing is the easiest and fastest way that you're going to get money for a business. Because with revenue financing, all that's needed is a quick review of your most recent bank statements. Typically, the lenders want to see your most recent 3 to 6 months bank statements, and they're ultimately just looking for good bank account management. They want to see less than 10 or they want to see no more than 10 non-sufficient funds on your bank account. They want to see positive ending balances at your bank account at the end of each month. They're just looking to make sure that you manage your bank account responsibly, and if you do, then chances are you can get approved. The great part about this program is that you can typically get approved and fund in 72 hours or less. So it's very fast money, and it's very easy money because all they're ultimately looking at is your bank statements for good bank account management. Your personal credit doesn't matter. As a matter of fact, we work with lending sources that will help you get approved for revenue financing, even with no personal credit check whatsoever. And you don't need any kind of collateral to get approved as well. All you need is consistent revenue, and if you have consistent revenue of $10,000 a month or more, then chances are good that you can get approved for revenue financing. Now, the third type of financing that we talked about here has to do with collateral-based financing. So with collateral-based financing, There's a lot of collateral you can use to get approved. So, for example, if you have inventory or if you have equipment, if you're an insurance agent that has a book of business, if you have account receivables or you have purchase orders or you're looking to buy commercial real estate or refinance commercial real estate, we even have financing where you can use to be able to obtain commercial vehicles, for example. You can use our house reseller program if you're flipping properties and you're a private investor. A lot of different options available with our collateral-based products. With this kind of financing, you can get very low rates. A lot of collateral-based financing programs will give you rates as low as 5% or less, and even give you working capital credit lines. So for example, with our securities-based financing and our 401k financing, you can get loans and you can also get credit lines. So let's say, for example, you have a 401k and you want to borrow against that. You can get as much as 100% financing against what's in your 401k, 90% financing against what's in your stocks. It's the 401k financing is based on IRS proven strategies, so there's no tax ramifications for you being able to get financing against your 401k, and rates are 5% or less, and you can get loans and credit lines. Securities-based financing is much the same, where you're getting up to 90% financing against the value of what's in your actual stocks. So you can get securities-based financing or 401k financing, two great options that are available based on collateral. Let's take a look, for example, at purchase order financing or account receivable financing. With account receivable and purchase order financing, you're basically getting financing quickly against the account receivables that you may have. So let's say another business or the government owes you money, for example. Well, you can use AR financing to get most of that money advanced to you very quickly instead of having to wait weeks or months to get paid. Purchase order financing gets you the financing you need to fulfill purchase orders, which really helps you ease your cash flow. So there's a lot of financing that's available for you based on whatever your strength may be regarding kind of collateral. Like I said, commercial real estate, 401k, stocks and securities. You also have inventory financing. Equipment financing gives you the ability to do three different things. You can actually purchase equipment even as a brand new startup business. So instead of getting a loan to get money to buy equipment, you can get a loan specifically for the purpose of buying equipment, and you can get approved even with average credit. You can also get equipment leasing if you've been in business 1 year or more. This gives you the same kind of financing as equipment financing, but with lower rates. You can also do equipment sale leaseback. So let's say you own a big valuable piece of equipment, or let's say somebody else around you that you know owns a valuable piece of equipment that wants you to let you use that as collateral. Well, you could borrow against that equipment and get financing and get cash out against the equipment that you already own. Three types of financing that are available through the Finance Suite based on your business strength. So the question becomes, what is your strength? Is your strength that you have good personal credit or a guarantor that does? Do you have consistent revenue, or do you have some kind of collateral? If you don't have any of these, well, then you're not going to be able to get a business loan from a conventional or an alternative lender. And that's the benefit of the Finance Suite, is that's when you can come in and go to the Build My Business Credit aspect of the Finance Suite and still access very high limit revolving accounts of $10,000 to $50,000 a piece in your business, even as a startup, even if you don't have cash flow credit or collateral. Or let's say you're the opposite end of the spectrum. Let's say you're a very well-established business that has really good revenues and tax returns that show good profits and average or better or credit. Well, then that helps you open up private financing options, including private equity financing, and we deal with all different kinds of venture capital sources. With these sources, we see loans of $100,000 or $500,000, $500,000. We've even done loans as high as $30 million with this type of financing. So if you're looking for a high level type of loan product where you're looking for a lot of money with longer terms and lower rates, well, then we offer that also through our private money finance. We've seen loan terms as long as 30 years with this kind of financing and rates of 8% or lower. So whatever it is that you're looking for